Today, folks, just call me Jerome Powell or Tiff Macklin because I got the money printer over here, baby. All the stocks we bought on the dip in March are now starting to pay off, though I do have a healthy level of skepticism on the back of the tariff war, the economic impact we might see hit earnings in the coming month. But again, I cannot tell you what to do, as I'm not a financial advisor, but here are the stocks that I bought. We're going to talk about the multi-millionaires in my chat group, what they're interested in when it comes to Ryokan. Tell us on the Canadian side of the border. We'll talk a little bit about Tesla, some of the politics going on in Canada and the US, trying to remain as biased as possible, of course. But if you are on a path to financial independence, if you damn well one day want to retire early, just simply join me by hitting that subscribe button. If you want to join my multi-millionaire chat group, go to kylelivingston.com, links in the chat group. That chat group's in the link in the description below as well, baby. But I'm going to come back to my watch list, but I was pleasantly surprised to see the amount of green going on, after the insane pelting of fear. And we all know when the depression starts coming out in conversations, the absolute recession that is imminent, it's usually the signal to buy. And obviously we picked up some good dips, I think, out in the market this month. One of the best that I think I'll look back on saying, wow, I'm happy I picked this up here, of course, being Google. Not as financial advice, there's a lot of risk that comes with individual stocks, but we did buy at an average of 167.30, 17 shares just before it dropped down another 3%, but now actually showing some signs of green. Our average buy price between the wife and I, because we both buy this between our accounts, is around 175, 180 bucks, because we were cost averaging between 165 and the 190s. We did stop buying once this thing really started to propel, and I didn't think I'd be buying any more, but when it drops this much, can you really blame me? I mean, whew, man, it's not often you see deals on the Mag 7 like this, and I really think with all the political crap that's been going on, people glued to their screens, even businesses that have been impacted by the tariff war, I think those businesses are probably going to up their marketing to newer audiences, and all of this is only going to benefit Google by retention ratings, clicks, driven advertising, and time will tell when those earnings come up if this is really a dip buying opportunity that will take us back into the 180s to 200 range. Now, don't get me wrong, I'm trying to be an upstanding financial clown in the community by cost averaging in the index as always and making them a relative large part of the portfolio as a protection mechanism against my own ignorance in case Google implodes on itself. But I picked up about 4 shares at $5.23, and I'm not really proud of that buy price, because I always said that when the S&P takes about a 10% dip, that is what I call correction territory, and that's where I will start doubling up my monthly contributions. But I wasn't able to capture the bottom. But again, whether I capture the bottom or not, I'm still going to do regular buys, and I did pick up 4 shares at $5.23 that we are now up on for the time being, along with the wealth preservation strategy I have. As I continue to scale the sizable portfolio that the wife and I have, I am starting to look at taking new capital in cost averaging into XEQT that will give me that world market exposure to Chinese stocks, European stocks, and stocks that I don't have much exposure to today. Now, I am looking at taking my shorter term trades that are about 1 to 2 years, things like Take-Two Interactive, perhaps Aduro, some of those smaller cap companies that eventually I'll roll over the gains if they do materialize into excelled returns into XEQT, where I already picked up about 118 shares in my RSP at around 33.71 that we are now up over 2% on. That was probably the lowest dip that I was able to capture, though again, I don't know where the market continues to rally. This is very short term, and obviously the portfolio as a whole I still think is down, but maybe by the end of today, if we keep the green, we'll now be positive again on the year. I mean, the S&P 500 is now up, well, it's still down about 1.5%, but because I had exposure to SCHD, VDY, some stocks that are doing substantially well, we weren't down nearly as much as the S&P. So we'll see if we're green by close today. It'll be very interesting. But I also picked up some Aduro shares. I picked up 100 shares at around $5 that we are now seeing a pretty good rally on. That we're up about 5 or 6% on those shares specifically. So those were what I would consider to be fairly aggressive buys for me that are actually panning out quite well. To remind you, regardless of recession fears, tariff wars, all this political crap, you got to keep buying, guys. And when there's blood on the street, it's usually the most opportune time to get rich. So we'll see how all of that pans out. But when it comes to my 7-figure WhatsApp chat group, the Rich Gang, talking about the Rio can, of course, I had to mention it in my video because, I mean, the company is literally now turning back down toward pandemic level lows. Since then, not only have they cleaned up the balance sheet resiliently, I mean, their yield is starting to go back up as they increase the dividend with a really healthy payout ratio, being Canada's largest retail REIT with the most exposure to Toronto, one of the most valued cities on the planet. The yield at 6.72%. Is this a dip buy? Well, the reason the stock's likely down is 2 things. First, Hudson's Bay is declaring bankruptcy, one of the oldest businesses on the planet. I think this is like 100 100-year-plus businesses declared that they are basically liquidating, announcing bankruptcy, all that stuff, which is about 3%, I believe, of Ryocan's exposure to their clients. Like, it's a 3% exposure, which isn't a huge deal, not enough to sink the stock like it's sinking it, but I mean, you can see all these different storefronts. Basically, 6 stores, HBC's ownership interest in them and their landlords are as follows, and you can see all across Toronto and the greater GTA. And I went to Hudson Bay to get some deals for the nieces, the nephews, but most things were still incredibly overpriced, even with the discounts. Though I do want to buy one of those mannequins, the dummies, because they're very tactile, and I want to use it as a door entrance piece so it can hold my keys and my clothes and stuff like that. I think it's really, really neat. But we should also point out that BMO cut Ryocan's price target to about $20, which I think is a bit ridiculous because the value of Toronto real estate is still exorbitantly high, and these malls have the most, square footage ownership. And I think the enterprise value of Ryocan should be like $25 at least. Like, Ryocan's worth more today liquidated than it is as a publicly traded company, which is why I think so many people are buying it, right? Because even at a $20 price target, maintain and outperform, I mean, we're literally looking at $17. So why is it going down? Same thing could be said about TELUS, right? Like, I think TELUS is starting to find its bottoms from a business standpoint with earnings, net income starting to stabilize here. But we get literally, an analyst that comes out and they change the price target to neutral, cutting it to $22, and the stock tanks to $19.86 where we're at now, right? Which is kind of laughable to me because we really got to see where the stock's going to go. And the only thing that's going to get us there is an earnings period. So, this tariff war started at the beginning of the year, and it's a really bad time to start because we have no certainty into any of these companies until the first quarter earnings. So time will tell. And one company I'm very, intrigued by, as many of you are, and pretty sure glued to your screens to see what happens, is the Tesla. I mean, Tesla is doing this really incredible jump, 22%, with literally no growth to look forward to. A company where we can't tell if the auto sales are even increasing, with global reports that they're seeing up to 70% declines month over month or on a year, like annual basis, with 134 PE. A company where BYD, their largest competitor, Tesla started the EV revolution, but China is starting to prove that they can create higher demand and valued products at better prices. I mean, they did 100 billion in revenue, now topping Tesla. They can only do 77 billion, which is actually down 6% year over year. The only hope Tesla has for growth continues to be in their energy, generation and storage, where everybody is basically pumping the stock on future expectations of robotics and self-driving, which to me don't matter as much because it was supposed to be a flick of a switch and everyone's car could become a robotaxi. But now we're told it's only going to be their specific vehicles, and we probably won't see a robotaxi network that I could personally, invest into and buy Tesla cars probably for another 3 to 5 years at least, until we can prove that self-driving even works as a robotaxi for them, right? So all of this leads down to, how is the stock trading at $277? Now, obviously I'm a bear, but I'm somebody that has played this stock very well, buying it in 2019, selling the rally, making a small fortune, and again, buying at an average of 180, selling around 240. I do not have the cojones to buy here, baby. I mean, this is a scary, scary stock to watch right now with the volatility, the politics, and so much more. But I'd love to know what you think, because on the back of politics, man, you got to mark down April 1st is going to be a very pivotal day to see if Trump is going to implement tariffs to the full extent, or if it's just going to be a lot of fluff with, basically tariff negotiations that will not impact the market the way it has been, as I'm sure people are starting to absorb that news and we're starting to adjust to it. But we have seen the full impacts of tariffs, from traveling to Canadian consumer spending, actually hitting real businesses. I talked to a guy that was shipping wine up from the United States, bought $500,000 worth of it back in December. He lives in Alberta, and he was told by the government, you're no longer allowed to sell that here. And he is actually lining up to sue the government, saying it was unlawful for them to do so. But time will tell how all of this is really impacting what sectors of the market. And we also recently saw a shift in Canadian sentiment around our own politics, because the Conservatives with Poilievre were actually leading, but now Carney is stepping up. Liberals actually bringing a balance to what basically Canadians think when it comes to this next election that they're calling now in April. So we are actually going to see an election very soon, and they're calling it at a good time when they're getting really good presence in the back of this tariff war that Trump has basically caused. But take a listen. I thought this ad was very interesting.
Go. Mr. Prime Minister, Mike Myers, what are you doing here? I just thought I'd come up and check on things.
You live in the States.
Yeah, but I'll always be Canadian.
But you live in the States.
Yeah, so? Do you remember Mr. Dressup, The children's show on CBC?
What were the names of Mr. Dressup's two puppet friends?
Casey and Finnegan?
Bud the
Spud?
Howie,
Meeker?
Capital Saskatchewan.
Regina?
Tragically.
Hip?
You're a defenseman defending a 2-on-1. What do you do?
Take away the pass, obviously.
What are the 2 seasons in Toronto?
Winter and construction?
Wow. You really are Canadian.
Yeah. But let me ask you, Mr. Prime Minister, will there always be a Canada?
There will always be a Canada.
All right, elbows up.
Elbows up.
Yeah, I thought this was a pretty funny ad. There were some good jokes in between, but again, remaining as biased as possible. I want to know, are you guys shifting more toward the liberal front since this tariff war has begun? Or are you still more on Poilievre's side, presuming the liberals have caused massive destruction? Seems to be the rhetoric across Canada leading up to this moment, and we don't deserve to give them a second chance. I'd love to know, because again, I'm going to be remaining as biased as possible, but I pass the question off to you. I'd love to know what you guys think about everything we talked about today in that comment section below. But as always, stay cool, stay awesome, and I look forward to catching you in the next one.